Hello, everybody. I'm your host, Egbert here at StopStrugglingNow.com. And today we're going to talk about wealth inequality, stocks, equities. That's what you need to understand what the wealthiest have. We got to talk about it. And welcome to Foci Optics. Check. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. And today you can see as usual, we're on the Stop Struggling Now YouTube channel page. And you will notice we're over 7,000 subscribers. I want to thank you for being here, and please share the videos to help other people. And you notice this join button over here on the right. That's a membership button. That's to support the channel. And you have special emojis, and I send out special messages on the community tab, and once or twice a month I send out a special video as well. So hopefully you'll join that party. And without further ado, let's get into this. Why you should be buying stocks right now, equities as they call it. Why you have to think about being wealthy in a top 10 percenter is more paramount than ever. And you might be asking yourself, hey Eric, I don't know if I should get rid of some money and invest it in the stock market, if I should invest in something else. The bottom line is you should be investing in something. But I'm going to give you some numbers, of course. So let's start with this. 328 million Americans in the United States as of 2019. There's probably, allegedly, there's more than that, but we'll go with the number from Google. So 328 million. Does anybody know how many millionaires there are in the United States? This ought to surprise you. 10% is 32 million, right? Or 33 million would be 10%. Well, Google says 18.6 million. That is it. Less than 10% of the population, closer to 5% of the population are millionaires, even in this inflated economy. That is unbelievable. 19 million Americans out of 350 million, really, American souls. That is despicable. So, with that said, I want to get into something else, and I hate to be saying this, but it has to be said. If you missed about 2 videos ago where I showed how much billionaires have extracted from the stimulus, $10 trillion. That is ridiculous. Stimulus money is taxpayer money that is going to have to be paid back eventually. So they get welfare while the rest of, well, everybody else waiting on those $1,200 checks get thin air. But anyhow, let's move on. How many billionaires do you think there are in the United States? So keep in mind, let's round up, we have 19 million millionaires in all the U.S. How about billionaires? 614. So, ladies and gentlemen, 19,614 people are millionaires or higher in all of the United States. And this is as of October 2020 for the billionaires. This is a record high. There's 614 billionaires. 400 of the richest Americans, meaning 400 billionaires, own 3.2 trillion net worth. Now, why does this matter so much? Well, this is why you should put your money where it needs to be, because this is why, here's the number. White people own 86% of wealth and make up 60% of the population. 60% of the population owns 86% of the wealth. That leaves 14% of the wealth divided up amongst Black, Hispanic, Asians, other. That's at least 4, 5, 6 different ethnic groups. Has 14%, which splinters that into, on average, if you got 14 and you have 5 ethnic groups, what is that? Less than 3% per ethnic group entirety. Yeah. And notice this line right here. White wealth is diversified among real estate, equities, and other assets. See these, what I keep saying about assets? Equities is stocks, real estate is self-explanatory. Whereas non-white wealth is mostly in pensions and real estate. There's a lot of teachers, there's a lot of people that work for the government, in state government. There's a lot of people that did that. That's pension money that cannot be funded because it's a Ponzi scheme in reality. That's another video I will make. But you have to keep in mind, pensions are based on when a person retires on a pension and they're getting $5,000 per month. And they retired at 62. And now they are 75. That's 13 years of $5,000 per month plus a cost of living increase. So now 13 years later, they're getting, I'll just round up, I don't know the number, but I'll just say $5,500. The new people who are getting hired in have to put money into the pension plan, just similar to the Social Security plan. There's one little problem though. In most states that have pension funds, they have handed them over to Wall Street hedge funds, or what can you say? They've basically borrowed against the pension fund to pay for the deficits. So there will be a reckoning one day. So this is why you need to have assets, equity, real estate, and some of those assets means that you are bringing money in. So if you're 62 and you're bringing money in, and you're 65 and you're 70, 75 and 45 and 35, and you have assets which bring money in, then you will be able to stem the tide when there's a downturn under any scenario. So this is why today I'm talking about why you should invest in equities, which is the stock market, which now with fintech banks, as I've shown some video, that you can now borrow against that asset, which are stocks. Okay? But back to this wealth inequality, then we'll get into some of these stocks, because this is what the graph looks like. Share of U.S. wealth held by race in America. You see this up here? That's the 86%. You might also notice something else. It's hovering around this 90, 88, 80, but over the last 10 years, look at what happened. It wasn't in the 90s anymore, starting around 2004, and it's just been going down. So even that 3 or 4%, 3.5, 4 percentile change means it comes up from the bottom, and that's why you see here an increase in around 2005. It makes sense, it correlates. So you start seeing a rise, and you see a rise in other. Whoever other is, it's not showing on this graph, but you see where Black, Hispanic almost still has a straight line across. Because if a person's Hispanic, they're at 3%, and if you're Black, you're at 4%. But other is above you. Other, we don't know who that is, but it could be Asian for that matter. We don't know. But it's very interesting how this is like a flat line down here. Meanwhile, the line up top is almost level as well, with only the last 10 years has that come down. There's a reason for this. is because the more that people understand about equities and real estate, the more that you can participate because nobody can stop you. That's the bottom line to the story. So once you realize that you should be gathering up assets, real estate, equities, which are stocks and bonds and things of this nature, then that just means you will be siphoning off what is going to be available to the wealthiest. Now, if that's not a strange sight, look at this average net worth. Again, if you don't think you should have stocks, bonds, equities, real estate, and assets, you are sadly mistaken. That should be your number one goal, is to accumulate assets. Okay? And you can see here the big disparity. $436,000 is the average net worth of a white person. Okay? Now, go down here to where they have other and black. And look at this. It's around 107, 105,000. Let's call it 108,000. That is it. And other is also in that same program. Now, look down here at Hispanics are half. 52,000. A little less than half average net worth by race. And since they only have black, Hispanic, white, and other in this usafacts.org for everybody that's on podcast, usafacts.org, I'll have a link down below to this article so you can read it and see it for yourself. No trickery. This is unbelievable if you consider one nation, under God, indivisible, with liberty and justice for all. Clearly, that line isn't liberty and justice for all, and it damn sure ain't equal. So, clearly, there is a gap, and it's a huge gap. And now you're about to see something that's even more astounding, is U.S. wealth by age group. And again, this is going to be about stocks, but I wanted to get you up onto what's going on if you decide to sit by and not be in real estate, equities, and gaining assets. Because if you're not doing those three things, then you are being left behind and you're flatlined. So hopefully all of this illustrates this, and you can see here 55 to 69 year olds have 44% of the wealth, almost half. And as soon as you add in the 70 plus, oh my God, 27 and 44. Ladies and gentlemen, isn't that 71%? So 55-year-olds and older have 71% of the U.S. wealth. Right. As they call them, boomers. They're the ones that have the 71% of the wealth. And believe this is even more astounding. When you add 40 years old and up, add another 21%. So 40 years to 69-year-olds, 40-year-olds to 69-year-olds hold over 90% of the U.S. wealth, ladies and gentlemen. Can you believe this? This is unimaginable. This just means the old thing that you heard me talk about before when my dad used to say, man, you make 2-3 times much more money as me. You should be good. Well, things don't cost the same as they did in 1980, 1985. We don't get a 3 or 4 or 5% cost of living increase automatically. This ain't happening. So you can see now if you're under 40 years old, you're under the 8 ball, and you're also trying to get wealth. It's regardless of skin color. So even if you're 39 years old or less, you're under 10% chance of being in the upper wealth range. So again, this shows that it's even harder when you're younger to get into the wealth. But the internet, once you realize what's going on, and with the advent of Robinhood and Webull apps like this, M1 Finance, Cash App, where you're able to invest in stocks and equities when you're able to invest in Bitcoin, this is something that a 20-year-old, 18-year-old, 25-year-old can do, along with the Instagrams, the YouTubes, the Facebooks, and garner some wealth a different way, online wealth, which is not going to be in this, considered in this charts. So this is why you're in the new era of wealth. So why not take advantage of it? If you didn't know you are now, I keep saying it, you are. Get your online real estate. Now, let's get into some stocks, because I mentioned about this the other day. Amwell, American Well Corp, A as in Apple, M as in Mary, WL. You can see here it just became an IPO and it started at $23. I did mention this at the around September 20th or thereabouts. And as you can see, it's already went up $11 from their IPO beginning. And that's already 50% up. They do not pay dividends yet. They just started. It's like a month old, if that. That's when the IPO came out. But as I said before, coronavirus is going to be with us for a long time, especially if a government doesn't care about people getting sick. So that just means more people are going to have complications due to coronavirus. There's also still going to be the flu. There's also still going to be influenza. There's also going to be cancer and whatever knockoff that's going to be caused from being sick, complications, all going to happen. There's already a couple of 100,000 people that are dead, but there's also 7, 8, 9 million that have been infected in the U.S. This number is just going to go up. That means more hospital, more medical. So therefore, I'm bullish. That means bull rise, goes up. That means medical stocks I'm bullish on. LVGO, you've known we've been bullish ever since it was 97, 98, 95. 4 months back. I believe it's around 140 right now. So again, what else is there? There's 5G. Apple's coming out with the 5G phones. I'm just using AT&T as an example because their stock has been going down, as you can see over the last year. But AT&T owns Disney, for instance. They own DirecTV, Cricket Wireless as well. But the thing is, they give dividends. And right now at this price, $27.75, AT&T stock is T for Tom. 7.5% on your money if you invest right now. And then, by the way, I bought some more tea today. So just letting you know. DHT, which has to do with oil and holding and tankers and things like that, they've been going down also, which is surprising because there's a glut of oil because due to the pandemics around the world, so there has to be storage somewhere. But yet these guys, even though their stock has gone down, they're still issuing dividends. So once again, this says 37.35%. I haven't checked the numbers, but I thought it was only 22% on the money. But apparently it's higher than that. So again, I bought more DHT today. Again, D as in David, H, T as in Tom. Next up, remember that 5G that I mentioned in the previous about 3 videos ago, where we were talking about stocks to look forward to. Here's a 5G ETF. And this is F as in Frank, I, V as in Victor, G as in George. And this is another stock that you may want to invest in. Again, do your due diligence. I'm not a financial advisor. I'm not a stock picker, chooser, anything like that. I just basically use common sense on what's going to happen in the future, so you guys would think the same similar type of way. Think about the future, not what's happening right now. And 5G is obviously going to come out, and this is an ETF where they invest in all different type of 5G companies. And as you can see, over the course of a year, it hasn't done much, but if you know, over the next, that's 23% on your money, or it's went up 23%. But the thing is, 5G is going to be built out over the next 5 to 10 years, so therefore it should have an increase. So once again, this is another stock that you may want to look into, along with when I had AT&T, of course they're in 5G as well. But again, there's other companies like Nokia that's even less than that. NOK. Eric, ERIC, actually gives dividends every 3 months. And they're into 5G, which is Ericsson. So once again, you have to think about investing for your future. Nobody's stopping you. It's up to you to take the risk. And do you want to take the risk and be like 10 years from now and go, hey, I took a risk on all this, and look, this stuff has went up 50, 100, 200, 300% on your money while you sleep? Think about it. And with all that said, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I'm talking about the stock market. If you have Robinhood, you can buy partial shares. If you just want to spend $5, $10, $20 on something, even if it costs you, even if the share like Apple costs $115 a share, and you say, you know what, I only have 20 bucks, you can invest $20, known as fractional share, and just say, I don't want to buy a whole share, I'll just pay $20. You can do it that way instead of wasting money somewhere else. At least you've taken a chance on your future. There's inflation. So remember, even though the stock that I have on the screen says $30 in 5 years, just due by inflation, it should rise. And you got a double whammy, right? 5G and inflation means prices are higher, so therefore stocks should go up. Just a natural thing. You stay with the inflation. But there is something that you can use against inflation, and that is gold and silver. Physical, gold and silver, APMEX, SD Bullion. You can go there and buy some silver, gold, precious metals. Now is the time. When you print $10 trillion, sooner or later, in a capitalist system, somebody's going to have to pay the price for inflation. Therefore, precious metals should rise. All right? Keep those things in mind. And cryptocurrency as well. Go down and get your free $10 worth of Bitcoin. Use the link down below. And remember, keep all of your information at 2 locations, because you're going to need your logins and usernames. And if you're using a nano ledger where you store your crypto offline, then you better know where it is, and you better keep the key codes and all that in 2 places. All right? You don't want to lose it, because you don't want to be like me. Have $1 million lost somewhere, or 2 million. I don't know what the number is, but it's over 1 million. That's all I know. So again, keep your head up, keep moving, and I'm out.